A big rally today, okay? We were talking in the last hour about, with Teddy Weisberg, how different today felt, like a new trading day, a new trading world. We have Yudi Chang to add into that. He's Ace Investment Strategist, Chief Trader. He'll tell you why large caps are set to shine. Michael Wall, Wall Financial Group and Retirewell President and Founding Principal, tells us why he thinks a 20% correction is still ahead. So we've got major opposing opinions here. And Todd Horwitz, down in the pits of the CME. Todd, do you agree with that? Hold on one second. We've got AT&T numbers.
And this is one the street's going to like, Liz. Earnings per share, 71 cents, beating the street. Its expectation of 70 cents. Revenue coming in at $32.5 billion. The street was expecting $32.47 billion. And just want to give you one breakout from this. First quarter total wireless revenue, $17.8 billion. Shares are unchanged right now in aftermarket trading. Back to you, Liz.
They're actually moving a teensy bit higher at the moment, David. And as we look at this, they're giving some outlook here. For full year 2014, their view will be that we'll see an EPS gain of $2.71. The revenue, $132.4 billion. That's the Thomson Reuters expectation. So as we wait on all of those, that high-speed internet subscriber net adding 634,000 versus 630,000 in Q4, it's a good sign, certainly for AT&T.
They also, by the way, added 1.1 million postpaid smartphones in the first quarter. So there is a lot of good news on individual sales fronts as well. Let's go to the market panel and talk about this. First of all, Todd, I want to go to you. There isn't a lot of action after hours with AT&T. Is the market getting a little inured? Stock value is already pretty high.
Hi, David. Hi, Liz. You know, when we look at AT&T, as I wrote you this morning, the stock has already had a very nice move right up to the top end of the channel and right at resistance level. We know one thing for sure. People aren't going to give up their phones and they're not going to give up their internet. So AT&T figures to work here, and it's had a lot of action as we've seen a lot of the money flow from the higher risk stocks coming into AT&T and stocks like that. So I expect AT&T to be fine here. I would think that you might see a little bit of selling pressure, but it's probably an opportunity to buy this particular stock, but we are right at the upper end of the range.
Okay, upper end of the range. Let me get to Yudi Chang, and you're a real believer in at least large caps. Is that a cautious play or a, hey, that's where the money's flowing now play?
Well, I think it's both. A cautious place a little bit. Recently, everyone started talking about a bubble in the tech stock or in the so-called growth or momentum stock, basically the internet. We're talking about the social media and the biotech stock. But in the same time, we're also seeking alpha, right? We need to find yield somewhere still in the stock market. Thus, a compromise will be these slightly lower PE and more stable of these larger cap and value type of stocks.
Michael, are you still looking for that 20% correction?
You know, David, that's a great question. I am, and quite honestly, I don't think it's going to happen in the next, 6-8 months. I think it's probably more like a year to year and a half out. That's my projection. Just because I think we're due. I think there's still a lot of hype, still a lot of play that way. But probably shorter term, in the next several months to 6-8 months roughly, I'm still bullish on some different things. There's obviously always opportunity out there. And Yum's a great thing to talk about today, obviously coming after the weekend, and everybody's coming down off of their sugar rush. So all good stuff.
But then what else would you advise, Michael, that investors do at this point? Because a lot of people, like yourself, believe that there is a much awaited correction that at some point might come in fits and starts or in one big chunk. We hope it's not one big chunk, but is there a way to Teflon proof, or at least, you put something around your portfolio to make sure that you're engaged in an opportunity to protect it when that happens?
Yeah, Liz, I think there is. I think the first thing that investors need to do is make sure they try and look at opportunities that do have some growth plays, growth arenas. And for example, in the natural gas sector, we see there's a company, Gas Natural, that we're looking at. We currently don't own, but we're evaluating it, and for several different reasons. One is that obviously natural gas, I think, has a lot of growth potential in the future. Another company, Cheniere Energy, I always remember it by thinking of Chanel, but Cheniere Energy is a company that also is in the liquid natural gas, going to be exporting and things like that.
We have seen quite a dramatic move in biotech, and one of the biggest names, Gilead, is out with numbers right now. Adam.
And it's pretty incredible. $1.48 earning per share. On the street was expecting 91 cents. The revenue picture, $5 billion. The street was expecting $3.98 billion. And Liz, I just want to let you know, antiviral product sales increased to $4.51 billion for the first quarter of 2014. That's up from $2,006 billion for the same quarter in 2013. And those antivirals like Truvada and Sovaldi. Back to you.
It's interesting that this was a name that people fled just 2 weeks ago. So this goes back to, David, what Warren Buffett would say: get in when people are most fearful, because eventually good quality companies will come back.
By the way, we should mention that that stock is halted after hours right now. The market giving the administrators of the market giving it a little pause for investors to kind of digest, analyze all this information, which on the face of it looks very good. I want to go back to UD if I can, because I'm surprised that as bullish as you are not fully invested. Am I right? Why not?
Yeah, no, I'm not. Basically, I believe in seasonality, David. If you look at it, basically the period between May to September, stock market really over history tend to not do too much. Most of the gain comes from October through the April period. So I think we're going into a period historically that is not that favorable to the market, and the fact that I don't think we're going to see a major earnings boost until the third quarter of this year. That's why I'm keeping my powder dry a little bit. But I'm telling you, we're seeking alpha, right? There's no yield to be had. You're not going to get another 7-8% in the gold market or in the bond market or equipment leasing for that matter. So stock market is still where the action is.
But Todd, if that's the case, what flows have you seen into, say, for example, dividend-paying stocks or utilities, telecoms, which traditionally fit into that?
Well, I think that we're seeing a lot of flow into stocks like AT&T, as we talked about, Verizon. We're seeing a big movement. There has been a big shift over time as we saw the money come out of Netflix, we saw the money come out of Tesla, and a lot of the momentum stocks. I'm in Michael's camp, but I do think the correction is probably going to come sooner. We cannot keep sweeping the bad news under the carpet. McDonald's, for example, I don't know what Yum has come out with yet, but this is news that affects us each and every day. We don't have a lot of discretionary income as an average American. There is not a lot of money at hand because of the cost of food and energy. Although we don't have an inflation gauge according to the government, people are spending more money to live by paying higher prices at the pump, higher energy costs, and higher food prices.
Michael, we're talking about average Americans. Most Americans think that real estate is a better investment than stocks right now. That was just a new poll that came out. You are betting on a stock that bets on real estate and specifically offices in New York. It's a New York REIT. NYRT is the ticker symbol. I have to ask you, just as office space is at its height in price in New York, and just before Mayor de Blasio is about to hike taxes, why would you go for real estate here?
Well, that's a great question, David. I think, first off, one of the things that I like about this play is when the company is buying the properties that they currently own. First off, most all of it's in Midtown Manhattan. And most all the properties that were purchased were basically purchased at some type of a discount most of the time. But the other factor that I really like is most of the properties have a long lease tenure, 7-10 years plus, triple net leases. So these properties aren't going anywhere. And quite honestly, as space becomes less and less available, I think leasing and making money off of that moving forward. And by the way, this is a play that investors have the ability to go out and participate in about a 4.5 yield with some growth potential without actually going out and buying physically their own property themselves here, there, and everywhere. They can use this particular play to do it.
Good to see you, Michael Wall, UD Chang, and Todd Horowitz.
Thanks, gang. Well, LinkedIn is among the high flyers whose wings have been clipped a little by investors this year. It's down more than 14%.